Hello, hello. Today I'll be going over, the AEW framework. This is just a framework of um, identifying a high probability structure with logic and tons of credit to many creators. This is just how I personally use it within my own trading. How I've learned from many different traders in the ICT space and have kind of merged them together to trade them myself, right? So there's three different frameworks that I will use: reversal, continuation, and a rebalance framework. So, and starting off with reversal. So to start here, right? It is very important to always reference a high time frame key level. Okay, so um, this reversal will be of a high time frame power of three. If you're not familiar with power of three, go reference my Discord. I have great power of three teachings, stuff like this, and schematics, or there's plenty of videos online as well. But get familiar with power of three first. But for a reversal framework, we were looking in the eyes of a high time frame power of three reversal. So in order for it to be high probability, the structure you want to find is failure swings or engineered liquidity on the way down towards the key level, looking to reverse from. Okay. Additionally, to align yourself low time frame with expansion and a higher chance of distribution, you want to align yourself with a lower time frame power of three. For example, this could be the 10 a.m. power of three, right? And then this lower time frame power of three could be the 10:30. So the 10 a.m. has been bearish this entire time, right? So it's going to continue to be bearish until this key level, likely, right? But this low time frame power of three, 10:30, is opening low and immediately sweeping a key level and then expanding higher with potential distribution. Okay, so that is a way to align yourself with the 10:30 power of three and the 10 a.m. power of three together. As well as this, we want to always have a low time frame appeal, and this is in the form of failure swings, engineered liquidity, LR, trendline liquidity, and this serves as a ramp to reach our high time frame objective. Even better if we have a high time frame failure swing opened and engineered by the high time frame power of three. To ensure this is even higher probability, you want to make sure you have a very, very high resistance stop loss. In order to do that, you want to make sure you sweep or mitigate a high time frame key level. This could be a imbalance. This could be internal range liquidity, like an internal level, or external level as well. And I'm going to show examples of every single framework here and trades that I've taken and data I've collected on all of these frameworks as well. Okay, and further to have this um, high resistance stop loss, right? We want this to be as high resistance as possible. We want to have expansion into this key level and expansion out, confirming the phase of price is likely going to be expansion. Okay, and this can be identified through fair value gaps in the manipulation leg and fair value gaps made with the expansion or distribution leg. Okay, another way to have this being very high resistance is having a low time frame stop hunt or um, a resweep of the initial mitigation. So now we have the high time frame key level, high time frame manipulation. But then we also have this low time frame swing low being swept. So low time frame protected low as well. Okay. So now you have a high time frame and low time protected low, low time frame protected low. And then if you trade quarterly theory or you trade with cracks and correlation, SMTs, it is ideal to have a sequential SMT, Kraken correlation attached to this level, either with the key level or potentially with this resweep, you could have some type of SMT or Kraken correlation. Okay, and finally, to have it very high resistance is you want it to be discounted relative to time and price. So what do I mean by time and price? Okay, so price, right? You can recognize that we are in a deep, we're like an extreme discount here. So that's relative to price. To be discounted relative to time, understand that we're below the open of this high time frame power of 3. We're below it, so we're in discount of this high time frame power of 3. We're also below the lower time frame power of 3, or we're in discount of this lower time frame power of 3. Okay, so that's how you're discounted relative to time and price. Okay, and the logic behind this, you want to understand there's logic to structure. So to trade a high time frame power of 3 reversal, you want to first align yourself with a lower time frame power of 3 to better align yourself with the expansion. Okay, and then also it is very important to have clear LR or low time frame appeal for price to have a clear ramp to distribute to your high time frame draw on liquidity. Okay, and trading reversals, um, even though this is the reversal for this high time frame power of 3, so this could be a 4-hour power of 3 reversal, that should still be aligned with the daily power of 3. So the daily power of 3, could open, and it could be bullish, right? We have this high time frame draw on liquidity, 10 a.m. opens, and then engineers liquidity above below high of day, retraces down. Potentially, this is the key level. We have the Kraken correlation, and then we distribute higher. Okay. Oops. Okay. So take note of the high resistance stop loss, because I'm not going to continue to go over it because it's relevant to each framework that we trade. Okay. So but yeah, this is a reversal framework. It should align with a higher time frame power of 3. And it's just fractal. Okay, so daily power 3 is in distribution. The 4-hour power 3 is initially bearish, but we want to continue this bullish daily power 3 development. So we're looking for a continuation or a reversal from a high time frame key level, and then the high time frame draw on liquidity. It could be high day. It could be relative to. It's best to have a time-based draw on liquidity, meaning it could be like a session liquidity. It could be previous day high, previous week high, stuff like that. Okay, so just recognize the draw on liquidity, the failure swings, down here, the high resistance stop loss, because this is going to apply to every framework, and I'm not going to continue to go over it. Okay, so now the continuation framework. This follows the reversal framework. Oops. Okay, so after we put in a reversal, say we did not catch it, or potentially we didn't have a clear entry here, right? Maybe there wasn't a low time frame stop line. Okay, what happens is our draw on liquidity is still intact, and after we distribute higher, we engineer liquidity at the highs. We generate these failure swings, right? We have a lower time frame power of 3. Okay, so this is all fractal, remember. So we have a high time frame power of 3. We manipulated this high time frame key level. We put in a protected low for this high time frame power of 3. Now we're looking for continuation to the draw on liquidity. Okay, so we require this LR, this engineered liquidity at the highs. A new low time frame power of 3 opens, adds to the liquidity pool higher, and then manipulates into a 5-minute plus fair value gap, or sweeps an internal low. It'd be 5-minute, 15-minute. It's all fractal. And then I require it's called an IMS, or a low time frame stop on initial mitigation sweep. So after we initially mitigate this 5-minute internal low, we re-sweep it, forming a low time frame protected low. So now we have this protected low, high resistance, and we have this protected low, high resistance as well. And then what do we want from that? We want expansion out of the key level confirmed by CISD, IFEG, or some type of candle confirmation. Okay, so this is the continuation framework. Same high resistance stuff applies here as I talked about prior. Okay, and this is the same idea with the power of 3. This is how you stack power of 3s and trade them together. Okay, so this could apply to any power of 3, any time frame. For example, this could be the daily power of 3, right? And this could be this might blow your mind here, right? So this could be the daily power of 3 opens and sweeps some key level. It could be London lows. Okay, now or not London lows, but it could sweep some key level, and now we're distributing. Now this is New York session. Okay, now New York manipulates lower, forms protected low, and now we're trading. Say this is like the 9:30 power of 3, or 9:30 30-minute power of 3 manipulates lower, and we're playing continuation of the daily power of three with the 30-minute power of three. Okay, now we can practice a lower time frame, right? What if this was the 4-hour power of three, 10 a.m., okay, manipulates lower, sweeps some key level, and we see this is the reversal framework, okay? We start distributing higher, we have a higher time frame draw on liquidity, okay? So what happens, we start to fall off. Say this is like 10:15, 10:20, we're generating engineering liquidity at the highs. 10:30 opens, engineering liquidity at the highs, manipulates lower, forms a protected low, expansion out of the key level with CISD, and now 10:30 is playing continuation of the 10 a.m. 4-hour power three to a higher time frame draw on liquidity, assisted by this, this ramp or these failure swings at the highs. Okay, so it's very fractal. Applies to every single framework, and this in the continuation sequence, we're looking for a low time frame reversal for a higher time frame continuation. Right, applies to every single time frame. Okay, so the final one is the rebalance. Okay, so say in this case, instead of us getting a continuation framework to this draw on liquidity, we actually engineer liquidity at the lows. Okay, so you don't want to trade continuation with failure swings beneath you. Actually, you would wait for this draw on liquidity or this key level to be hit. We have not only this unmitigated imbalance, so we have unbalanced price range, right? We also have these failure swings leading to this unbalanced price range. Okay, so price sweeps this high time frame draw on liquidity, potentially forming a Kraken correlation, SMT, SSMT, whatever you use. And then we have a low time frame sweep, stop hunt, initial mitigation sweep, whatever it is. And then we have expansion into the key level, expansion out of the key level, confirmed by CISD, IFEG, candle confirmation, whatever it is. And then we have clear targets to rebalance price lower. I don't take these as much because inherently a rebalance is fading the distribution, but it is a way to participate in price if you're not offered a continuation sequence like this. Okay. And how does this play with the power of three? Okay. High time frame power of three could initially manipulate lower and sweep out some form of high time frame key level. Okay. So say we don't participate in the reversal and then a continuation sequence is not offered. Now we have the opportunity to play a rebalance with a lower time frame power of three opening, engineering liquidity below, manipulating higher, forming higher resistance at the highs and lower resistance at the lows, allowing for bearish power of three development for this lower time frame power of three. Okay, and now if we wanted this lower time frame power of three to actually be bullish, we would still want this power of three to manipulate lower. So this is almost an agreed upon drawn liquidity now, because let's assume this is the 4-hour power of three, 10 a.m. It's expanding higher. Okay, so for us to continue a bullish distribution, we want all lower time frame power of threes to develop bullish. Okay, that means opening lower, manipulating, expanding higher. However, this 10:30 power of three manipulates higher initially, um, and opens higher, right? So that is developing bearish. So now for this 10:30 power of three or 11 to now be bullish, we need to see lower prices. So that is the explanation or the logic behind how these power threes fit together. Okay. Also, a mistake I see a lot is sometimes price is already rebalanced. Okay, we might see something like this, right? And then we hit that high time frame draw on liquidity. But at this point, it's like this is now high resistance right here. And this isn't very relevant because we already rebalanced price beneath. Okay, so like there must be a reason to rebalance. There must be like a clear expansion. And there should be nothing above for price to target. Price should be like exhausted almost. It has nothing further to draw towards. That's like the only reason or time that I would actually look for a rebalance is price has clear reason to go lower. Not only because the failure swings, not only because of unmitigated imbalance, but because there's no reason to draw higher. Okay, now I'll get into some examples. Okay, this is the power of 3 stuff. So we'll start with continuations. Okay, and I'll also reference this stuff as we go through it. Or I'll start with reversal, and I'll also reference these so you guys can see how that all fits in together. Okay, reversal. Okay, so notice how this is 10 a.m. open right here, so we're trading the 10 a.m. reversal. Okay, what do we see? We see this large expansion, right? And then we're generating these kind of swings right here, but they're failure swings. They're failing to reach these previous swing highs. These failure swings, failure swings, failure swings, right? And then we sweep this low of day, which is a time-based draw on liquidity. We form a three-stage SSMT at a key time, within the 4-hour power of 3. And if you really study it, this is also a 10-15, 15-minute power of 3 open. Okay, so now we have 10 a.m., 10:15 manipulating lower, and then we have clear failure swings leading to this, this imbalanced price range right here, as well as it actually plays out to a data high above, where 930 Devil's Mark has no manipulation above, but we can look at this as a reversal and or rebalance. Okay, so we manipulate this low of day, and then we see expansion here. It's not the prettiest, but we end up um, seeing this play out with a second, this right here, this little sweep right here, this internal sell side sweep, this stop hunt, and then a CISD to target this unmitigated imbalance or data highs higher. Okay, that's one example of a rebalance and slash reversal. Next, okay, so we see that 10 a.m. opens right here. Okay, so this is our high time frame power of 3. And what does it do? It opens higher and creates a failure swing at this new high of day. Okay, then what does it do? It expands lower, sweeping a relevant internal low. Okay, and how does it also align? Right, so we have this high time frame power of 3, 10 a.m. generating a failure swing at the high time frame draw on liquidity. But then we have 10:30. You see, this is 10:32 low made. So this is 10:30 opens right here. We have a stacked lower time frame power 3, 10:30, manipulating into the high time frame key level, which is that internal low marked, and then it performs a low time frame stop hunt with this sweep right here, and a CISD with expansion higher, targeting buy side. Okay, do another reversal here. We'll focus on this 10:13 reversal to buy side. Okay. So notice 10 a.m. opens. What does it do? It engineers failure swings. We're failing to reach this high. We come down lower. We fail to reach this high again and form another failure swing. Then we manipulate into this 1-hour internal low and 4-hour fair value gap. And then we have clear expansion higher with a 1-minute CISD, IFEG, everything to then expand higher to these higher time frame draws and liquidity. Okay, do one more here. Okay, let's see. 930. What does 930 do? It accumulates. Okay, now we have low of day below is a clear drawn liquidity. We accumulate, we manipulate higher, right? We initially mitigate this 1-hour SIBI, but then 10 a.m. opens, we see the initial mitigation sweep, right? We have the low time frame stop hunt or initial mitigation sweep with 10 a.m., the new power of 3 opening, sweeping it. We have a Kraken correlation at the highs, and we have this 1-minute CISD entry to target lower prices, as this is a failure swing to the low of day. Now we'll get into some continuations. Okay. Now we see this will be the first continuation we'll focus on. So for continuation, we want to have an established reversal. So this is the established reversal. We have a 2 a.m. high sweep with a 3-stage Kraken correlation, like SSMTs, formed at a relevant time, expansion away. So that is our reversal right here. This reversal, this is flipped because it is a bearish example. Okay, now we're looking for a retracement back into the range. So we're now in premium of the range. We form a protected high with this internal stop rate, mitigating these sell side inefficiencies. And we see expansion away with a 1 minute CISD, and we have clear draws lower or continuation, right? We have these failure swings, really failing to distribute from low of day. Now we're distributing lower. And how does this align with the power 3 is 10 a.m. opens, right? We do sweep low of day at 10 a.m., but we kind of accumulate, form these failure swings, and then we manipulate higher into the range after we have an SMR or a smart money reversal established. Okay, and also there's another continuation here as well. We have a, fractally, we have reversal, a low time frame reversal or continuation. And what happens again? We fail to, I think there's a high time frame draw on liquidity below that we can't see, but we retrace back into the range. Look at 1030 here. 1030 engineers liquidity at the lows, manipulates above 1030 open. So now we're in a time premium now. We're in a 5-minute fair value gap. We form a protected high with this internal raid. We have an initial mitigation right here. We have a resweep, initial mitigation sweep, expansion away, confirmation with a CISD, targeting low hanging fruit or a lower drawn liquidity. Okay. And then this, let's see here. This is a good example of a continuation as well. So what do we have initially? We have the reversal framework already established. So after the reversal is confirmed, maybe we didn't participate in the reversal move, and we still have draws open. We have a failure swing to a relevant swing below. So we can still frame or have a framework for lower prices. So what happens? Price, we see 10 a.m. opens. This is a 10 a.m. reversal right here. 10 a.m. opens, resweeps this this high right here to then expand lower. Further, after the expansion, we see retracement. What happens? We're forming high resistance at the highs, sweeping this high within this sell side inefficiency and generating failure swings or LR at the lows. What does LR lead to? It leads to a high time frame failure swing and a high time frame relevant swing. Exactly what we're looking for here, right? This is obviously flipped because it would be bearish, but we have the SMR established. We have the retracement into the inefficiency or imbalance, a low time frame or initial mitigation sweep, aligned with a lower time frame power 3, failure swings leading to a high time frame draw on liquidity. Okay, right? We have when is this high made? 1036. We have a 10 a.m. reversal into 1030, engineering liquidity at the lows, manipulating higher, sweeping this internal high, right? This is initial mitigation sweep of this, sell side inefficiency. And then what do we have? We have clear expansion away towards the failure swings, toward the high time frame failure swing, towards the high time frame relevant swing, or drawn liquidity. Okay, so it's very repeatable, guys. I'll do one more continuation here. I really do prefer continuations, but because they're trading continuation to me is just higher probability. The smart money reversal is likely confirmed already, and we're trading to an open drawn liquidity. So this is a trade I took yesterday, I believe. So what do we have? We have clear manipulation within the 10 a.m. power of 3. Okay, 10 a.m. opens right here and expands lower. Okay, it does sweep this 930 low, random time. Okay, not random at all, but expands lower, and then we have manipulation of low of day, a time-based, external range liquidity pool, or just a time-based key level. It's formed at 10:15. Okay, right? There's no clear CISD entry except if you want to take this right here, which is a very large stop loss. So I just waited. Okay, and we expanded higher. We still have an open draw on liquidity right here, high of day being a time-based draw on liquidity, as well as high time frame buy side liquidity as well. So this is really a failure swing to this buy side. And then what happens? What am I waiting for? A retracement, right? This is exactly what is marked here. We engineer failure swings at the highs, retrace into the 5-minute gap, form to protect the low, expansion away, align with a lower time frame power 3 to the draw on liquidity. Okay, what happens, right? We have a 10 a.m. reversal established, 10:30 opens higher, really manipulates nothing. Engineers LR, trendline liquidity at the highs, failure swings, creates higher resistance at the lows, right? By manipulating, this is a 5 minute fair value gap, this dotted line right here, 5 minute fair value gap. The stop hunt isn't as clear. It would be like, sweeping out these lows right here is making it more protected. And then we have a clear expansion higher, confirmed by like mechanically by the CISD. We have these fair value gaps being formed, and then we just have this continuation to high of day and later to the high time frame buy side. Okay, and now we'll do rebalance. Again, we went over this one already. This could be a rebalance play because we have this unmitigated 15-minute fair value gap with failure swings leading to it, high time frame key level, cracks and correlations confirm the manipulation, expansion away. We have a new power of reopening that can allow us to trade higher prices. This is a trade I took. This is the trade I took yesterday. The other one was a day before. Here, what happens, right? We expand higher. We have a minimal retracement here, barely mitigating this 5 minute gap. And in this scenario, there's no high time frame draws higher. So either price can engineer a DOL at the highs and then return to it, which is what it did. But first, it would have to, move lower to engineer or allow a move higher. So what happens, right? 10 a.m. obviously, it initially, manipulates into a 5 minute gap, and then we see this failure swings. We have this LR trendline liquidity being formed, right? There's no fair value gaps within, this leg. High resistance distribution. There's no DLLs higher whatsoever. So what am I waiting for? I'm waiting for a new lower time frame power of 3 to open. What is that? A 10:30. 10:30 opens. We form this small high right here, and we perform a low time frame stop rate or a stop one. This is also within a 4 hour bearish fair value gap as well. So there is reason for lower prices or to face resistance as when we're moving higher. So we perform the stop hunt. Now we have a at least temporarily high resistance swing point. And then what is that? What happens after? We have expansion away confirmed by the CISD, and then we have all this LR to target beneath us, which we expand through. So notice how I wait to play, rebalance play as 10 a.m. Was expanding higher until I can align myself with a lower time frame power of 3 to then expand lower. Okay, and that's what I have for the rebalance plays. But yeah, you guys take a screenshot of this or whatever. But I really recommend you guys study this. This is really improved my consistency so much within my trading. Just having consistent structure within all of my trades rather than just, a checklist or entry model, but understanding the logic behind the structure, understanding trading towards failure swings and trading away from high resistance has really improved my trading a lot. And I really recommend it. But yeah, we have a free Discord where we provide all this information if you stuck around, and it'll be in the bio. And you can DM me or my buddy with any questions you have. But yeah, have a good one.